see about 40 people get on a luxury bus liner and head to New York. They called it one of the Abbott buses, and many of them were happy to get on because it's free, and also they have family in different parts of the East Coast, and so that's a way out of Texas quickly. One of the things we noticed is that there weren't a ton of people in Eagle Pass itself in terms of like on the streets or things like that, because they are passing through these border towns pretty quickly. They're there for a few days through nonprofits or being processed, but then they are moving on to other parts of Texas and now through some of the buses to places like New York and Chicago.
Peggy, as you guys were on the ground, there's something about, reading a story and then there's actually somebody, you folks were on the ground seeing all of this, going to the rallies, hearing what the candidates or the former president and the president had to say about this issue. How are you guys in the newsroom thinking about kind of maybe what needs to be done, on a federal level to make it a better situation? I don't want to get into the politics of it, but just to ease the problems of, the stress on certainly the United States, but also enabling, migrants to come in, which is such a part of the fabric of this country.
Well, I think one of the things we saw, Carol, when we were there is the vantage points and the perspectives of different people. We talked to a city council official. We talked to law enforcement with the Texas Department of Public Safety. We talked to people who work with nonprofits and church that serve the migrants and the migrants themselves. And two things really stood out across all of those groups of people, which are, one is the fact that this is a really human story. It's a story of human resilience, but it's also a story of a humanitarian crisis in which a lot of children are involved. But then also law enforcement was saying to us, we really do need help in terms of better policies and better enforcement, because there are people who are getting exploited all along the way. There are smugglers on both sides, on the U.S. and Mexico side, who are putting other people in danger, drugs potentially coming across, things of that nature. So we really did hear time and again from all vantage points that we need improvements in the system, because the volume of people is going to keep coming. These people travel for days, weeks, and months, and when they get across the Rio Grande and the river and they see barbed wire, they're crossing through it, because at that point they've come so far that they're going to keep coming.
Hey, Peggy, 30 seconds here. How does this play out politically over the next 7 months in the national general election?
Well, I think that's what we'll be reporting on, but I do think it's going to continue to be one of the top issues. The economy is the one that we keep polling and hearing from people in all of the swing states is number one, and immigration has become the number two issue. And immigration and border security are very much so linked in voters' minds.
All right, Peggy, thank you so much. Really appreciate being able to bring this story out to everybody. Bloomberg News Washington Bureau Chief Peggy Collins joining us there in our bureau in D.C. Well, coming up, Tim, how does a 4-day work week sound?
I have to say...
Like, I don't know the answer?
It sounds pretty good. And I think even, my managers would agree with me on that.
Like, yeah, for everybody. Everybody. Yeah. All right, everybody, one more thing is coming up next.
I love my job, but 4 days.
We both do, but 4 days, long weekends, that's next.
From Bloomberg World Headquarters, I'm Charlie Pellet. Disney has handed CEO Bob Iger a vote of confidence. The shareholders having their meeting today, they rejected dissident investor Nelson Peltz's bid for a board seat at the giant entertainment company. Shareholders elected all of Disney's choices for the board, turning aside the nomination of Peltz. Investors also rejected Peltz's ally, former Disney finance chief Jay Rizzullo, and a slate from Blackwell's Capital, another dissident group. Disney shares, they are down now by 2.4%. Eli Lilly's weight loss drug Zepbound is in shortage in the U.S. after mounting complaints by patients, doctors, and pharmacists who are having trouble finding the drug. According to the FDA, 2 doses of the medicine will be limited in their availability through the end of April. The agency says the supply constraint is caused by increased demand. Lilly shares, they're up today by 1.9%. Ulta Beauty shares are plunging after the company said it expects first quarter comparable sales to come in at the lower end of the low single-digit growth range it had forecast for the first half of its fiscal year. Ulta Beauty now lower by 14.8%. Ford's U.S. auto sales up 7% in the first quarter on strong demand for gas-electric hybrids, despite a laborious launch of a redesigned F-150 pickup truck. The automaker handed over 504,815 light vehicles to American car buyers in the first 3 months of the year, as hybrid models surged by 42%. Ford shares, they're up right now by 2.3%. And those are our top company stories at this hour. And this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stennebeck on Bloomberg Radio and Television.
It is Bloomberg Business Week. Let's get a check of the latest world and national news. For that, we go to Amy Morris, who's in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Amy.
Hi, Tim. Rescuers are still searching for anyone who might be trapped in those buildings damaged by a massive magnitude 7.4 earthquake that struck Taiwan. At least a dozen people have been killed. Hundreds have been injured. NATO Secretary General Jens Stoltenberg is proposing a $100 billion fund that would support Ukraine through the next 5 years.
We are transforming NATO's comprehensive assistance package into a multi-year program of assistance. We are helping Ukraine move closer to NATO standards on everything from procurement or logistics. And we are supporting Ukraine's reform efforts to bring Ukraine ever closer to the alliance.
Secretary General Stoltenberg. A new outbreak of avian flu has forced the nation's largest producer of eggs to temporarily shut down plants in Michigan and Texas. It comes as health officials have found bird flu infections in dairy cattle and now at least one person. Dr. Jeffrey Kahn is chief of infectious diseases at Children's Health in Dallas. He says COVID-19 taught them an important lesson.
These viruses, they can mutate and adapt to their new hosts. Right now, I think the risk for humans is very low.
The person who tested positive had been in contact with infected cows and suffered a minor eye irritation as a result. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg. Now back to Bloomberg Business Week with Carol and Tim.
Thank you so much, Amy Morris there in D.C. All right, so the billionaire, he's an avid golfer, very successful investor. We talk about him a lot. When there's a story about him, it's usually among the most read on the terminal. Spoke with a competing network and...
This is the most read on the terminal.
It is.
It is, yeah. We're talking about Steve Cohen, who says that he expects more businesses are going to move to a 4-day work week, and that's one of the reasons he's made investments in golf. So, Carol, in an interview earlier on CNBC, he said, quote, "My belief is that a 4-day work week is coming. This fits into a theme of more leisure for people." He said that fewer people are working anyway on Fridays because of hybrid work. I don't know if you know that because you come in every day.
Nice work if you can get it.
Yeah.
Yeah. Maybe that is the case. I mean, I don't know if you're working from home, you're supposed to be working from home. And
yeah, but the thing about working from home is that
now we're going to get some insight when COVID. No, you were here the whole time.
I was here the whole time. Yeah, I'm imagining what it's like working from home. I have no idea.
A dream.
But if you think about it from a commuting perspective, right?
Huge.
You're knocking off a couple hours or maybe an hour and a half, depending on where your commute is. So you can get that much more work done. Maybe stop working at like 3 o'clock or 4 o'clock on a Friday. I don't know. Get a head start start on your weekend?
I will say during COVID, like I would
But if
sometimes
you
go
ran to golf?
outside, like in the middle of the day, and just like eat my lunch or do something that I wouldn't normally do at
So
work.
I think maybe this could be possible, but I think what would hold back a lot of firms from doing this is if the markets stay open 5 days a week.
Yeah, I think if you're tied to the markets, like,
Yeah.
well, what's interesting is Cohen, he did say that he'd keep his own traders and portfolio managers working 5 days a week. He said taking off Friday when you have a portfolio, that would be a problem. But we should point out that he has invested, along with a consortium, up to $3 billion in an entity being formed by the PGA Tour and Saudi Arabia's public investment fund. So that's why he's maybe thinking about.
Or maybe he also wants people to just go and watch the Mets on Fridays.
Well, of course he does.
Yeah.
Of course he wants them to go watch the Mets. He wants them to go there. All right, everybody, that's going to do it for this hour of Bloomberg Business Week on television and radio. For you watching on TV, the close is coming up next. But for us, we're going to continue covering Disney, talk a little bit more about what needs to come at the Magic Kingdom.
And speaking of Disney, it is the cover of the new issue of Bloomberg Business Week, the $2 billion Aussie kids cartoon that's captivated the world. Yeah, we're talking about Bluey.
I can't tell you how excited Tim has been about this story. Also, we're going to get into the Trump lenders of last resort, and we're going to talk about the labor market with a former U.S. Department of Labor official. Got a big read on Friday. This is Bloomberg.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
All right, everybody, we are just 1 hour away from the closing bell on this Wednesday, April 3rd. We've got stocks rising, but they're off their best levels of the session as Jay Powell of the Federal Reserve, of course, kind of doing that wait and see tone. We keep saying that over and over because that's what he keeps saying over and over. He's going to wait and see before they start to cut rates.
Hey, I thought that was actually a really cool speech that he gave a little earlier.
Well, it got personal, which is kind of interesting, right?
He's an all-business guy, especially when he's, giving these press conferences. So hearing from him, I'm just going to go a little off script here, but hearing from him as talking about going from, being a lawyer, then going and working, jumping to private equity, jumping to the public sector, talking about being nimble and self-confident. I mean, it was really interesting.
It was interesting. He also, they were laughing around too, and he was asked about his crystal ball, and he doesn't have one, he says, but it was good. All right, folks, we are going to continue to track, obviously, the markets for you. We're also going to go in and continue to go in on Disney, who backed each side. You know some of it. We covered it in the last hour, but watching that share price and watching that company, because it sounds like more changes to come, especially when it comes to Succession.
And it was one of the most streamed shows in the entire country. Actually, it was number 2
Did you watch it at your
last
home
year.
a lot?
That was thanks to us, I think. We're talking about Bluey. It is the cover of Bloomberg Business Week. Devin Leonard's got just a fantastic deep dive into the company behind it, and also whether or not there's going to be a season 4, Carol.
All right, we're also going to get into, speaking of viewing and watching stuff, we're going to tell you why spending an entire Saturday on the couch binging your favorite TV show is actually quite productive. So we're going to break that down.
Well, stay tuned for that.
All right, first up, stay tuned because we're going to get a check on the trade today and your top business stories. Over to you, Charlie Pellet.
We are in the final hour of trading right now, and we have got stocks trading mixed. Dow Industrials, they are lower. The Dow down 14 points right now, tipping into the red. S&P holding on to a gain right now of 11 points, up by 0.2%. NASDAQ up 62. That is a gain of 0.4%. 10-year yield 4.35% with a 2-year that's yielding 4.67%. Spot gold up $16 the ounce to $22.97, up 0.7%. West Texas Intermediate crude up 0.4%, 85.49 for a barrel of WTI. Bottom line here, the S&P remains higher after Jay Powell reiterated the Federal Reserve's wait-and-see approach before policymakers decide to embark on interest rate cuts. As for the Fed, the interest rate outlook and the market backdrop, Leslie Falconio is head of U.S. fixed income asset allocation at UBS Financial Services.
I think the market's reaction right now is a bit of a repricing after being a little bit overzealous. But regardless, how data dependent the market is right now, that doesn't alter the long-term trend in our view, which is that interest rates are going lower.
Leslie Falconio of UBS. OPEC Plus has decided to stick with oil supply cuts for the first half of the year, keeping global markets tight and potentially sending prices higher. Crude, as I mentioned, up 0.4%, 85.48 a barrel. Among oil stocks, ExxonMobil little changed, up less than 0.1%. BP, the ADR, is up 0.6%, while Chevron up by 0.5%. Again, recapping here, we've got stocks trading mix. The Dow now lower, little change, down 11 points. S&P up by 0.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. We've been talking about it quite a bit over the last couple hours. It's been a costly months-long proxy battle, but Walt Disney shareholders handed CEO Bob Iger a vote of confidence, rejecting dissident investor Nelson Peltz's bid for a board seat at the giant entertainment company. Like I said, we're going all in on Disney during the first part of this hour today, from how the company prevailed to what it means now that it's triumphed over Peltz. First, key to Disney's win was the backing of the company's two largest shareholders, none other than Vanguard Group and BlackRock. Together, they control about 15% of Disney's stock. Crystal C. is Bloomberg News Deals reporter. She wrote about how each side campaigned ahead of the vote and the importance of the institutional backers. She's here in the Bloomberg Interactive Brokers studio. So we talked about, I mentioned Vanguard and BlackRock, but talk about how they came out in support of Iger ahead of this.
Yeah, so we reported that Vanguard, the largest institutional shareholder with almost 8% share, was supporting the company, the management, yesterday. So it's actually pretty unusual for an institutional shareholder to not support management. So that was interesting. But actually what's missing here is that the biggest voting bloc here is actually retail investors. Over 30%, actually almost 40% of Disney stocks are owned by retail. And you know, a lot of kids, when they're born, they get a share of Disney as a present. And a lot of these are Disney fans, and they tend to side with management. Actually, in any given proxy fight, over 80%.
So the retail also sides with management.
So any given proxy fight, 80% of retail investors that vote would side with management.
That's just typical.
It is a typical scenario. Not all of them vote. It is incredibly hard to get retail investors to actually cast their vote because a lot of them are not used to this proxy process. But this actually had happened this time as well. Like, we've seen the show up from retail, and those are also siding with management. And that's why we see today's result that Iger and all Disney nominees have been elected into the board.
It just feels like, Tim, it was kind of a torturous, long, costly fight for Disney. We know that they've been, going after this, and then when all is said and done, they're still in place. But they obviously, as we heard we talked with Geetha Ranganathan of our Bloomberg Intelligence team, that they've still got to make some changes, especially when it comes to succession.
Yeah, I want to get to those changes in just a minute.
But think about it differently.
But I still want to stick on the voting side of things. Even though this is, Bloomberg reported this yesterday, I still think this is fascinating, Crystal, because there were also some companies and individuals who came out, prominent board members who came out in support of Nelson Peltz.
It's like being picked for, a volleyball game or something, or dodgeball,
yeah,
right?
When you're in, like, junior high or
who
something.
Who gets.
Yeah, there's a lot of, we are endorsing Nelson versus we're siding with Iger. So there are institutional shareholders that voted with Peltz. Neuberger Berman actually said in a statement that they would vote for Peltz, and they did. And again, because so much of this is owned by retail shareholders,
right?
And there's actually no one single institutional shareholders that had over 10% share. So even if you get all the index, all the passive investors to vote for you, you really still need to count on the retail investors. And that's what Disney is doing really well in this proxy fight, where they have gone all out in the social media campaign. And you go on Spotify, you go on Instagram, you're getting all these ads of a friendly Disney voice telling you to fight for the white proxy card, and that had actually successfully pulled some of that votes for them.
Well, nothing like a media company knowing how to market itself, right?
Exactly.
I heard some of those ads
like
ahead of podcasts. I was like, why are we hearing these ads?
That is
kind of weird.
I mean, is that unusual for a company to be that aggressive? It's almost like, before the Oscars, right? When the movies go out.
For your
and
consideration, vote for Bob Iger.
Exactly. But is it unusual to kind of reach out in that way?
It is unusual because this is actually the most expensive proxy fight that we've seen, the data is showing that Disney actually had said they spent they budgeted $40 million on this proxy fight. And that goes to things like social media posts, that goes to traditional mailing to their shareholder list. And those things are expensive. And now that they've won, that is finally going to be set aside, and you can focus on running the company again. But it's time-consuming and very costly.
Okay, so speaking of that, I want to bring in Jamie Lumley, senior analyst at Third Bridge Group, joining us from New York City. So Iger's won the battle, Jamie. Now he's got to fight the war. As we just heard from Crystal, the pressure is still on. What is at the top of the agenda for him to do now that he's won the proxy vote?
Well, the pressure is definitely still on, and it's hard to think of just one thing at the top of the agenda because it's so long. But if you had to pinpoint one thing that I think investors will really be looking at is streaming profitability. The company's planning on finally driving profits in fiscal year 2024. This is coming after so many quarters and years of billions in losses in this segment. And we've heard Bob Iger talk about how important the streaming transition is for the business, really making sure that they're hitting their mark and achieving their goals. That's definitely priority number one as they move beyond this proxy fight.
Yeah, it is interesting. I mean, Tim, you were talking kind of in the newsroom. It's like they won the battle, but have they won the war, right? They still have to make some changes. I mean, at the core of what Disney is, it's a lot of moving parts, and some are much more significant. I find it wild to see that we are looking at a Disney today that when you talk about what really moves the profit needle, it's really parks at this point.
Parks are definitely huge. And if we think back to one of the big news stories at the end of 23 was the fact that Disney is doubling its capital expenditures in its parks and experiences business over the next decade. And $60 billion is substantial. And it really shows the realization at Disney that while, of course, it is a priority to build out streaming to make sure that they have a transition away from the linear assets, which have historically been a big profit driver. Parks have been consistent coming out of the pandemic. Domestically, it's been a strong profit driver. International has surged, seeing the year-on-year improvement in those markets. It's definitely a top priority. And one big question also that investors have is where this new capital investment is going to go, because to date, and you could hear this on the shareholder meeting today, Disney is not really they haven't shown their hand as to where these dollars are going to go. There are some large projects, but there's still some uncertainty as to how exactly they want to strengthen this business for the future.
Jamie, what do you think this means for the succession planning at Disney? Because that had come up over and over again, and not only just from Nelson Peltz, but also the other activist Blackwells.
Well, certainly, if Peltz had been able to get on the board here, it would have been really interesting to see what that would do to succession planning, as it could have definitely elevated the chances of anybody who was not currently at Disney. As one of the major points Peltz has reiterated over and over again is the advantages of having an outside, fresh perspective. But with Disney getting their board together, solidifying control here, it really turns to looking at those leading internal candidates. And there's been so much speculation about who this might be, whether or not you want to prioritize someone in the entertainment division, which needs a lot of work, or the parks business, which is, as we've highlighted, an incredible big profit driver, or sports, which is, another huge dynamic area with Disney, with the joint venture coming up, ESPN being lost in flagship. There are arguments for leaders of all these divisions taking the reins, but the big question, of course, is who is best suited to manage all of these all together.
Well, let me ask you that, Jamie. I mean, who is the best suited? I mean, I remember that, what they did, right? It's always been kind of internal candidates. I remember when Jay Rasulo was CFO and Tom Staggs was head of parks, and they, would switch positions so that they could learn more about the company. And with the understanding that one of these guys might be the heir apparent at some point, it didn't play out that way. But do you believe that it needs to be somebody internally, or does it need to be somebody maybe from outside with a different look for a different view maybe on the company?
So at Third Bridge, what we've been hearing from the experts we speak with is really just the strength and importance of Disney's culture in determining who this is going to be, and how more likely than not, they're really going to lean on some of that internal muscle that they have. And if we look at some of these leaders, there's Dana Walden and Alan Bergman over leading the entertainment division. Both could potentially be a good fit to really regalvanize that business. Josh D'Amaro over at Experiences to really lead that. There are definitely some individuals with impressive track records who could come in here internally and lead this company. But of course, it's really hard to know exactly how the board is going about this. They've been fairly hush-hush about who exactly is even officially in the running here, but there are definitely some people to tap internally who could be a very strong leader.
But you don't think it should be somebody externally then?
It seems, based off of what we're hearing, it is fairly unlikely Disney will turn externally. But then again, we'll have to see what the board wants to do here.
Hey, Jamie, tell us, take us into the economics of streaming here. Like, why is it so hard to make Disney Plus profitable? I mean, Netflix, look, it took a long time. It took many years, but Netflix is profitable. They know how to do it.
Yeah, Netflix is profitable, and one thing which is amazing is that they've been turning an operating profit ever since they launched streaming in 2007, which is definitely amazing, and one thing that all the streaming players, Disney included, is jealous of. And there are a couple of reasons here why it's been such a big loss leader. First, it's just customer acquisition. There's been such a race to have growth at all costs to try to catch up to Netflix's scale, which at this point is looking increasingly difficult, with them at 240 million, Disney around 150, 160 for their core Disney Plus offering. With that growth comes a lot of marketing, so many dollars spent to try to get people to come and stay. And then also the content costs. We've heard so much about how content is king, how there's been this golden age of streaming and the programming spend that has accompanied that. That is one thing which also right now is coming to a bit of a shift over the last year or two, with profitability at the forefront, with the strikes, some delays in content spend. That's one area which is getting a bit of an adjustment as Disney and other players try to balance the books and make sure that all their spend is rationalized. So between content, between marketing, between also just building the infrastructure for ad-supported tiers, making sure the technology platform is there. There are a number of major costs to make this a large-scaled and viable business.
So, Jamie, I don't know if you cover Apple by any chance, but we just have a story about our own Mark Gurman just crossing the Bloomberg. Apple has teams investigating a push into personal robotics, a field with the potential to become one of the company's ever-shifting next big things. This is according to people, Tim, familiar with the situation, follows just shortly after they said, we're done with the car. Right?
Yeah, engineers at Apple have been exploring a mobile robot that can follow users around their homes, said the people, who asked not to be identified because the Skunkworks project is private. The iPhone maker has also developed an advanced tabletop home device that uses robotics to move a display around, they said.
Yep, efforts said to be in beginning stages, and it's unclear if the products will ultimately be released. Shares of Apple not really necessarily moving, although they look like they're moving a little bit lower on this news, down about 0.5%. Before we go back to Disney, Jamie, any thoughts? Do you follow Apple?
I cover their media team, so if you have any question about Ted Lasso, I'm your guy.
Yes, that's great.
All right.
Well played, Jamie.
Well done, well done. All right, so I don't know. Is there a timeline that we have to give Disney at this point?
Well, the thing which we really have to hold Disney to is definitely the streaming profitability goals. I mean, seeing if they can achieve that. One of the big questions is, about Bob Iger's return to this company, making sure he's executing on that while also seeing his CEO transition, succession happen. That's key. And then also more color about the long-term operating margins for streaming. They want double digits. It took Netflix a decade to get double-digit operating margins consistently. So those are definitely some things to look at, and really that year timeline is going to be key for the company.
And what about the parks? They have said that they're going to spend $60 billion and revamping the park. And Universal Studios has said that they are going to have some new attractions. They have a new location in Florida where it's Disney's home turf. What do you think about the $60 billion? How do you think that should be spent?
So what we've been hearing from our experts is that really the priority for Disney is much more on these huge immersive experiences than kind of one-off rides, think the traditional Space Mountain kind of feature. They're really trying to build these new lands which have people just spend so much time in the park and drive these really engaging experiences, and then also justify the increasingly expensive day passes that Disney commands at its various parks. So in terms of where this will go, Disney's announced a variety of different features. If you listen to the call today, expanding different, massive experiences in Paris and Tokyo and their international stage. So looking at some of these large-scale projects is what we're going to be keeping, an ear out for Disney to really get some clarity as. For them, of course, the constant story is how do we monetize their 100-year history of IPs and their new stories, and these immersive experiences are definitely one of the areas they may look towards.
Hey, Carol, one character you will not see at Disney.
What's that?
At the Disney theme parks?
Who?
Bluey. Despite the fact that Bluey is streamed on Disney Plus throughout the world, except for China, New Zealand, and Australia.
Not yet, Tim Stenovic.
Well, they don't have the rights to it.
That's
They
true.
didn't buy up the rights.
But maybe it's just negotiations, or maybe they missed the.
We'll ask
did they
Devin
miss the-
Leonard in a few minutes. 'Cause,
All I know is I've been to the park. It's been a long time. My daughter was younger, and I gotta say I had a blast. And I kind of want to go back and go to the Frozen Park. I've never been there.
you want to be one of the grown-ups who goes without kids to Disney?
Yes,
There are a lot of
yes.
them. There are a lot of them out there.
Jamie, thank you so much. A lot of fun. Really appreciate your insight. Jamie Lumley, Senior Analyst over at Third Bridge Group, joining us in New York City. And of course, our thanks to our own Crystal C. She's Bloomberg News Deal reporter right here in our studio. This is Bloomberg.
It's 3:21 on Wall Street. We do check markets all day long, and we begin with a headline right off the Bloomberg Professional Service. Redstone and Skydance have struck a tentative deal for a Paramount stake. Developing story. That's all we got right now. That's the headline. More details as they become available. The other story that we want to pass along to you, sources tell Bloomberg Apple has teams investigating a push into personal robotics, a field with the potential potential to become one of the companies ever shifting next big things. Apple right now up by about 0.4%. It is a mixed day on Wall Street with the S&P now lower, giving up earlier gains, slipping into the red down by 0.5 point. Emphasis on little change. The Dow down 103 right now, lower by 0.3%. Nasdaq holding on to a 19-point gain, up by about 0.1%. 10-year 4.35%, with a 2-year that's yielding 4.67%. Gold up 0.7%, $22.95 the ounce, while West Texas Intermediate crude is up 0.4%, $85.48 right now for a barrel of WTI. Margie Patel is Senior Portfolio Manager at Allspring Global, and on surveillance this morning, she said Fed rate cuts this year may be off the table.
Well, I think the ability to get to 2%, frankly, is out of the Fed's control. But it seems that as we see the economy continue to be very strong, it doesn't need rate cuts to continue at these levels. And also, it looks, there are signs here or there that although inflation's come down, other parts of the inflation picture look as if it's stabilizing at levels significantly above 2%. So the Fed really doesn't have much of a case right now to cut rates.
Margie Patel of Allspring Global. Again, recapping, stocks are now trading mixed. Both the Dow and the S&P 500 index are lower. Nasdaq up by 0.1%. S&P down less than 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Well, if you're a parent of kids of a certain age, then the TV show Bluey needs no introduction.
Like Tim.
Yeah, you've probably seen it. You probably love it. And you're more than happy to pay Disney Plus each month to keep those episodes streaming. As Devin Leonard writes for Bloomberg Business Week, it's, quote, a show that's both hilarious and deeply moving in its portrayal of how children come to terms with the world by playing games and how parents can foster this by joining the fun no matter how wacky it becomes. Devin Leonard is a Bloomberg Business Week senior global business writer. His story, the cover of the new issue of Bloomberg Business Week magazine. It's available on newsstands, on the Bloomberg, and at Bloomberg.com/businessweek. Devin, I can't tell you how delighted I was to see that Bluey got the cover treatment
I
from
can tell
Bloomberg
you,
Business
he was
Week.
like off the charts.
When I heard this was happening, I was like, I cannot wait to do this. But give us an idea of how this story came together.
You know something? Ray Hermanche, who's one of the editors, she asked me to do it while I was in the midst of some piece about Sean Diddy Combs and his, his demise, and it's kind of like, I was just like, yeah, sure, because I like to take assignments. I'd never heard of this show, I'd never watched the show, and frankly, all I knew was that I thought it was a Disney show, which it isn't even a Disney show. It's just a show they licensed, but. I started watching
lucky
it.
for them.
Yeah, well, not so lucky for them. But no, I just I started watching it and really got into it, and then I realized actually the people who were really sort of handling the licensing and the merchandising, it was actually BBC Studios, the commercial arm of the BBC. So I started talking to them, and was I going to go to London? Was I going to go to Brisbane, Australia? Well, I wound up going to Brisbane, Australia, where I also met, along with some of the top people from BBC Studios, Joe Brum, the show's creator, and also the founders of Ludo Studio, who produce it. So it's a whole kind of amazing thing, culminated in a trip last month.
So all right, because you know how popular it is, because you watch it a lot. And I think if my daughter was much younger, we would be watching it.
I'm trying to get my kids to watch it. Hey, you got to check this out.
Well, the funny thing is, it's not just appealing to kids, but talk to us about how popular it is.
Well, it's not just the most streamed kids show in the U.S. last year. It's the second most streamed show, period, after Suits.
Amazing.
And Suits has 9 seasons of episodes that are about almost like 42 minutes long. I mean that's the whole thing. You get lots of streaming numbers for if you have lots of episodes. Bluey has 150 episodes, they're only 7 minutes long, and it's just 3 seasons, and yet. People are watching more Bluey, than Friends, than Gilmore Girls, than NCIS. So there's something going on here. Something really crazy with the. It's not just kids watching it. It's a lot of other people too.
What's interesting in your piece that I learned so much in the piece. I encourage everybody to read it, even if you've never heard of this show. What I found fascinating was this wasn't something that was set to be a hit from the pilot. I mean, this is not following the formula of the typical kid show by any means. This is not cookie cutter.
Right. Well, no, that's the crazy thing. You have this guy, Joe Brum. He's 46 years old. He lives in Brisbane. That's where he went to high school. He spent some time in London as an animator. Worked on some shows on the BBC. He came back to Australia. Had a sort of a little animation company that he was running for a while out of his house. and he kind of missed, being around a big crew. So he was sort of like, well, if I'm going to have that again, I need to create a show, create my own show, because that's probably the only way it's going to happen. So it's like, well, what's that show going to be? And he liked Peppa Pig, but he was like, he couldn't rip off Peppa Pig, and do, that's like Peppa Pig's family are pigs, and all the other families are other, species. So he's like, okay, so I'll make a show about dogs. My family will be Australian blue heelers, and their families will be dachshunds and basset hounds and all this stuff. So then he's home. He has two kids who it turns out are the same age as Bluey and Bingo, or about the same age as Bluey and Bingo are now. They've actually gotten older on the show. Bluey's 7 and Bingo's 5. They started out as 6 and 4. But so he was able to draw on his own experiences because he's home with them, and he's trying to work and he's running up and down the stairs. And anybody's watched the show, that's what's going on, with Bandit, the show's father. And Bandit, by the way, is an archaeologist, sort of not a stay-at-home, but almost a stay-at-home archaeologist, which is kind of interesting. But in any case, he put together a pilot. The pilot, it had Bandit taking Bluey to the playground. Bandit's playing, Fruit Ninja on his phone. He pushes Bluey around the swing set. Bluey goes around the swing set, clunks him. He shows it to these guys at Ludo Studio who he'd done some work for, and they liked it. And it was supposed to be from the start. He wanted to do a show that's kind of both for grown-ups and for kids, sort of with two levels of kind of humor. Even though but anyway, the Ludo's guys liked it. They tried to shop it around, and people said to them, "Hey, is this Family Guy or is this Peppa Pig?" And they were kind of like both. And people just didn't get it, except for one guy, Michael Carrington, who was head of children's at the ABC. In this case, the Australian Broadcasting Corporation. But it's just, just the genesis of the show is so strange because really it was just Joe Brumm, missing being around a lot of other animators.
First of all, I've always adored you, and I love your reporting and respect it. But to hear you talk about Bluey in such detail, it just takes it to a whole other level.
Nice difference from talking about Diddy, the legal troubles that Diddy faces.
I'm like trying to think. Well, wait, the last time we talked with you, which is what makes you so wonderful, Devin Leonard.
No, but it's just this material is just as rich, and it's kind of crazy. But.
Well, speaking of rich, right? It's made a lot of money for some people.
Yeah, it's
who?
Well, it turns out the ABC basically you might say that they really sort of discovered the show, and Michael Carrington was able to get the ABC to put some money into a pilot. He said I would have greenlit it on the spot, but they didn't have enough money. So, but they did give Joe Brumm and Ludo enough money to actually make a 5-minute pilot. Which BBC Studios loved, but as part of the deal, BBC Studios wound up with the international distribution and licensing rights, and the ABC guys like, well, we don't have those kind of resources, so they might as well take that. But so then they're the guys that have been making all the money. Ludo Studios controls it, so they're making money. Joe gets a percentage of the revenues, but they're the people doing all the toy deals, and all that. Yeah.
Well, what about Disney?
Well,
because that's how people watch it in most of the world.
Yeah. No. I think I said before I came into this whole thing. This is a Disney show. Oh no, it's just a show they license. And in 2019, they outbid a whole lot of other, including Nickelodeon, to for the rights to distribute the show, i.e. on their platforms, on Disney Junior, Disney Channel, and on Disney Plus. But what they passed up at the time, they also had the chance to license the merchandising and the theme park rights,
which they understand.
That's a
yeah. But so that's that's something they really regret now. Anyway.
Yeah.
Go ahead.
Okay.
We've only got about a minute left.
Season 4. Is there going to be a season 4?
He's asking for his kids.
It hasn't been announced, and season 3 is about to culminate with a special episode. The Sign is 28 minutes long, and people are sort of saying, there's going to be a season 4, but actually nobody can say for sure. Everyone's trying to act as if there's going to be one, but season 3 was greenlit in 2020. That's been running in Australia since 2021. Wow. So So basically, they wrapped season 3, in like around sometime in like 2022, maybe late 2023. So there's nothing else out there, and this is when the excitement about the show it's just just keeps getting higher and higher. People are really excited about the time. But then what? And also, what's Bluey worth? I didn't mention it before, but Bluey's been valued, as said to be worth as much as $2 billion. It could be worth, going forward, it could be worth as much as Peppa Pig was and was sold to Hasbro.
Yeah.
For $4 billion. But with 3 seasons, I don't know. And it's just unclear. Joe Brum, who's really a creative genius, whether or not he wants to keep going.
Interesting. Well, and when you're a balloon in the Thanksgiving Day parade, you're a big deal. This was a gem. Devin Leonard, Senior Global Business Writer for Bloomberg Businessweek. It's the cover story of the new issue of Bloomberg Businessweek that will be out on newsstands, already online and on the Bloomberg terminal. Devin, thanks.
Let's get a check on the latest world and national news. Let's go to Amy Morris in the Bloomberg 99.1 newsroom in D.C. Hey, Amy.
Hey, Tim. The search continues for survivors after Taiwan's strongest earthquake since 1999. Bloomberg's Adrian Kennedy is in the capital, Taipei, where he says the impact was relatively limited compared to the epicenter on the eastern side of the island.
There are people trapped over there in collapsed buildings. We've got more than 24 collapsed buildings, and we understand that in a tourist area known as Taroko Gorge, there have been rock slides and possible tunnel collapses.
Bloomberg's Adrian Kennedy says Taiwan Semiconductor moved some staff and some of its smaller rivals halted operations. TSMC is a major chip supplier for Apple and NVIDIA. NATO Secretary General Jens Stoltenberg is proposing a $100 billion fund to support Ukraine over the next 5 years. He says it's part of a package for leaders to sign off on before they meet in Washington in July.
We are now discussing ways to institutionalize more of the support within a NATO framework, to make it more predictable, to make it more robust, because we strongly believe that support Ukraine should be less dependent on short-term voluntary offers and more dependent on long-term NATO commitments.
Secretary General Stoltenberg discussed the proposal ahead of a NATO foreign ministers meeting today in Brussels. Congestion pricing in Manhattan, another step closer to reality. The plan is to charge drivers $15 to enter Manhattan to reduce the number of motorists and cut down on pollution. The state of New Jersey is trying to put a stop to it. New Jersey Governor Phil Murphy says it will not reduce pollution, just move it around.
You're not eliminating pollution, you're displacing it from Manhattan to New Jersey, and you're charging our commuters an exorbitant fee on top of that.
New Jersey Governor Phil Murphy bringing his case to federal court. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris. This is Bloomberg.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got 20 minutes to go ahead of the closing bell. Choppy trading. We do have the Dow trading lower now. We've got the S&P back in the green, but let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bailey Lipschultz.
And good afternoon, Charlie. As you said, stocks are now mixed after spending the bulk of the day in the green. The Dow is down 75 points. S&P higher by a few, with the NASDAQ gaining 10 points. The U.S. 10-year yield is little changed at 4.35%, and small caps are up 5 points. 6 of the 11 main S&P sectors are trading lower, with consumer staples and utilities providing the biggest drags, while energy and materials are leading to the upside. Nasdaq biotechs are down 15 points. Transports are up 80. Semis are little changed, while the VIX is flat at 14.6. Leaders in the Dow, Caterpillar, IBM, and Amazon, while Intel, Disney, and Procter & Gamble are the worst performers. Apple trimmed gains after a Bloomberg report that it's exploring home robots. iRobot shares spiked as much as 17% on the news, while Intel is down 8% to the lowest since November after a weak outlook for its factory operations. In deal news, Sherry Redstone struck a tentative deal to sell her stake in Paramount to David Ellison's Skydance. And wrapping things up, Disney's Bob Iger won a proxy fight over activist investor Nelson Peltz. Shares are down more than 3% in their biggest decline since November. Live from the First Word Breaking News desk, I'm Baby Lipschultz. Charlie?
Okay, we thank you very much, Bailey. And to hear live breaking news over at your Bloomberg, type SQUA, S-Q-U-A, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, well, I don't have to tell any of you this. Shares of NVIDIA up more than 80% so far this year. Last year, 240%. Although our next guest is optimistic about the long-term productivity potential of AI for business, Carol, he says investors need to be selective and don't get carried away with the momentum enthusiasts.
Yeah, I believe that stock is the second best performing name in the S&P 500.
And what's the first? Supermicro, right?
Yeah.
Another AI play.
Exactly.
But it hasn't been in the S&P 500 all year, so we can't really
that's fair, but nonetheless.
Yeah.
But NVIDIA was the top performing name in the S&P 500 last year. Hey, so let's get to it. Let's bring in our Drive to the Close guest, Alan Lance, back with us, Director of Research at lanceglobal.com, President of Allen B. Lance Associates, joining us once again from Toledo, Ohio. Alan, good to have you back with us. Talk to us about, nice to have you here. So when we talk about NVIDIA, what, do you think that there's more room to run, or that, that there's, break it down for us.
Yeah, I think, it's going to be winners and losers differentiated much more so than last year. I think like 2023, Apple was up when they had flat earnings, and really it just rode that wave of the AI and the mega, tech theme. But, this year, I think what we're seeing are the winners and losers. We liked NVIDIA going into the year, and we liked Amazon and Meta and Google, Alphabet. And basically, the two that we didn't like was Apple and Tesla. And it's really shown just the first 3 months of the year, where NVIDIA is still, I think, cheap. I mean, I would buy
really
850 area or under. If
you would buy it, sorry, repeat that. You'd buy it when?
Like 850.
Okay.
It was there, like a week or so ago, and we were nibbling on it. For clients that don't own it, we have a lot of clients that own all those, and we sold some Tesla in the 200s, and we'll probably revisit Tesla if it continues to weaken. But I think they are dealt with the hardest hand, Tim, here, and Apple is the second most difficult. The one we'd probably buy of the Magnificent Seven, or the former Magnificent Seven, would be Alphabet, just because I think they really botched the launch of Gemini, and I think they've got some good things to come. And they're going to do probably what Meta did, and why we like Meta. and that's just cut back expenses and really focus on certain areas. And Apple's doing that, but it's just going to take longer, and there's more uncertainty.
On that Magnificent Seven, there, like we've been calling it Magnificent Four, but on the Magnificent Seven, JP Morgan about a month ago said Magnificent Seven stocks are cheaper versus the rest of the equity market than they were 5 years ago, given their latest set of earnings, and they kind of put that out. So they believe that there was more room to run. Having said that, how do you kind of distinguish, Alan, between getting caught up in momentum plays and just getting caught up in that euphoria versus really kind of understanding the fundamental plays, which is what you seem to be breaking down when it comes to a name like NVIDIA?
Yeah, it's really the fundamentals. I mean, NVIDIA is cheaper than it was a year ago, even though it's done so much as far as an appreciation side. While you have a Tesla that's struggling and an Apple, that hasn't shown growth in multiple quarters. So I think that's the difference. They all rode up in 23, and now it's a matter of people looking at the fundamentals, and I think that's going to be the key areas as far as into the future. Even as this AI plays out, there's going to be big winners and losers, and you want to make sure you're in the right areas. Everybody's going to be talking about it and saying that they have an advantage with it, but it's going to be few and far between. But that's the biggest difference, I think, is just looking at the fundamentals instead of just momentum and technicals, and staying away from the higher risk areas. Even NVIDIA, if it continues to move up, we'll start lightening positions, especially when it's over concentrated, which it is for some of our accounts.
Hey, Alan, I'm curious about Apple because it's down close to 12% so far this year. Our own Mark Gurman out with a pretty cool story. I don't know if you've had a chance to read it.
Not so magnificent this year, though.
No, not so. No, like I said, down 12%. Yeah. Apple's exploring robots as its next big thing after the car fizzles. Where does Apple need to go from here for you to get to a place where you could start buying and holding again?
That's a great question. I think another 10% down, we'd start looking at it again to buy for accounts that don't own it. I still think I love their ecosystem. It's a great company. It's just a matter of there's a lot of uncertainty. They've got a lot of headwinds with China and different things that they're trying to square away. It's kind of what we saw with Meta. When they had their problems in 2022, and I think Alphabet and unfortunately Apple will have to go through that. And Apple, I think the headwinds are even stronger, and that's.
Does that mean there needs to be a year of efficiency at Apple, Alan, where they'd lay off thousands of people like Meta did? I mean, that's one way Meta got there.
I think Alphabet will be the first to start doing that, in a major degree and start cutting back. But I think if you continue to see the results on Apple, we might even see it there.
But does Apple need to find a new source of revenue, right? The iPhone has been, such an outstanding product for them, right? And still the bulk of their revenues. But having said that, they scrapped, after almost 10 years, the car project. We're talking about Mark Gurman and his exclusive on exploring robots as kind of the next big thing. Do they need to, in your view, though, find a new source of revenue? I feel like we've been talking about this for Apple for a long time, and yet the Apple iPhone continues to deliver.
Exactly. And their service has really picked up, with the apps and that, they have some, regulatory, issues and they do. That's one of the reasons we were, more negative on Apple and Tesla, just because of the uncertainty. And we can see the revenue sources with Meta. We can see it with Amazon, and obviously NVIDIA has come through with flying colors. But with Apple and Tesla, I think it's difficult. They definitely need, but it's unclear right now, and that's why we wouldn't chase it. From a standpoint of buying it just because it's down from 190 to 169. Mm-hmm. I think in the 140s we'd start revisiting it, and if it looked like they're starting to do the right things, like I think Alphabet is, then it'd be time to start accumulating in the weakness.
All right, gonna leave it there. Hey, listen, thank you so much. Apple shares, by the way, folks, just up about 0.8% here in today's session. A quick check on what Alphabet is up to. Alphabet is up just about 0.2%, so little change there. Alan, thank you so much. Really appreciate it. Alan Lance, Director of Research at LanceGlobal.com, President of Allen B. Lance and Associates, joining us once again from Toledo, Ohio. Just about 10 minutes to go here, folks, and we've got kind of a mixed trade. This is Bloomberg.
Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need. Like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
complicated things in terms of how, there's a lot of gases that goes into manufacturing these semiconductors. And I think clearly there will be a level of disruption.
TSMC is the main contract chipmaker to both Apple and NVIDIA. Apple shares, they're up 0.6%. NVIDIA down 0.6%. Those are our top company stories, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
All right, everybody, just a few minutes left in the trade, 4.5 minutes to go. And we're going to head over to our TV colleagues, Scarlett Fu and Alex Steele, and then we're going to break down the close on this Wednesday session. But in the meantime, our most read story in the Bloomberg is a Bloomberg exclusive by none other than Mark Gurman. And again, it's about Apple and what they are up to. Maybe their next big thing, Tim.
Yeah, how does this sound to you? A mobile robot that can follow you around your home.
Done.
Because Apple's working on that, according to people familiar with the situation. They asked not to be identified because the Skunkworks project is private. Apple also developing an advanced tabletop home device that uses robotics to move a display around. You know, that reminds me of the Facebook Home. Do you remember that?
No.
It was
no.
this.
Was it? Yeah.
It was a dud.
Yeah.
But it was like a thing to. I don't want to say FaceTime, but whatever Facebook's equivalent of FaceTime is.
Yeah, you mean something so you could like kind of talk to people?
Yeah, so you're like chopping carrots or whatever, and like you're FaceTime.
Hey, how you doing? Oh, hey, look what I'm doing. I'm chopping carrots.
Apple has good camera technology that does that with its webcams. Its newer webcams.
Apple wants the home market. Isn't that something that they've been wanting for a long time, like on a wider scale?
Yeah, that's why there was so much talk about this Apple TV, right?
Yeah.
They wanted the largest screen in the home, and to a certain extent, they've gotten there because of what they have with Apple TV and also with the media service.
Yeah.
But they own the phone already, and the phone is sort of the central hub still of everything.
Yeah.
I think what Apple's concerned about is the slowing growth, and that's what investors are concerned about: slowing growth of the handset market, and then also as as people take longer to upgrade, what's the next thing they're going to be working on?
All I know is whenever I walk around or I'm sitting on the train going home and I just look around and everybody's just buried in their phone. And
I
I'm
know.
like,
I saw that, yeah.
It is such a part of our world. And I just go back, how many years, 10, 15 years, 15
There was a
years
guy
ago
reading
that
an
wasn't
old
that way?
newspaper on the train
Like,
yesterday.
who are you?
And I just kept looking over and reading it over his shoulder. I hope he didn't mind.
I remember doing that sitting on the train. And
It was
you'd be
just such a
like-
novelty to see that.
I mean, I would buy newspapers on my way out. I'm not that old, but I'm old enough. But it's just...
iPhone's only been around since 2007.
But I just, I don't know, can they find something that moves the needle, right? And that has decent margins, and I don't know.
It's not going to be a car.
Not going to be a car.
I don't know about this robot, though, Carol.
Hey, if it does stuff, like what does this robot do? Does it just follow me like my dogs at home? I already have two of those.
You don't have to take it out to go to the bathroom in the middle of the night.
That's true, but you probably have to put it on a charger every once in a while.
Yeah, that's true.
All right, do not go anywhere, folks. Time to talk over to the markets and over to our TV colleagues beyond the bell. It starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
About 2 minutes away from the end of the trading day, Scarlett Fu and Alex Steele here counting you down to the closing bell, and here to take you beyond the bell is Carol Messer and Tim Stenevec from Bloomberg Radio, and of course, welcome to all of our audiences across our various platforms. You know, we were just talking about the jobs report and how that's going to be the next big catalyst because it just feels like we're treading water here.
Yeah, I agree with you. I feel like the markets don't know quite what to do, certainly on the equity side of things, but we're waiting. We didn't get anything really new from Jay Powell, surprise, surprise, but do we see more strength in the labor market that starts to make people say, okay, folks, let's really think about what the Fed needs to do this year. Maybe they don't need to do much.
I know I've been focused on this throughout the day, Carol, but we did get something
You've
new
been
from
focused
Jay
on
Powell.
Bluey, the new cover story of business.
That is great.
Bluey! He's totally been obsessed, guys.
Have you guys seen the cover of Business Week?
Okay, yes, I have. And Tim, this is you and me because we have young kids. These guys don't know the Bluey thing.
Oh, but it turns out, I read the story, Alex, and it turns out that there are adults without kids who like Bluey, too.
Ooh. Yeah, but Scarlett and Carol don't have that kind of time. But I hear you.
Yeah, exactly.
You're so right.
The episodes are only 7 minutes.
It's totally worth it, guys. Just okay. Anyway,
the story.
we got off track. What were you talking about?
I was actually going to say that we did learn some new stuff from Jay Powell, which I thought was interesting at the end of his
What
speech.
did we learn that was? Oh, I know.
Yeah, like he gave advice to these college students about,
what was his advice?
Jumping around from job to job, making sure you have the self-confidence to take the step and go to that next job. He talked about moving from private equity to the public sector and moving back and forth between the private sector.
So he said you should job hop?
Yeah.
Does not bode well for me, Scarlett and Carol.
Oh, that's
We're all taking notes. Exactly.
Jay Powell telling college kids that they should job hop. Okay. All right. I don't know how you price that into the market, but we are looking at a mixed day here for equities. Certainly when you look at the major indexes, the S&P 500 gaining about 0.1%, the Dow losing ground just slightly, losing about 35 points, a drop of 0.1%, and the Nasdaq up by 0.25%. It should be noted that the Russell 2000 is the outperformer here, up by a whopping 0.5%.
Job hopping, you know what you do? It's like jolts, right?
Okay,
Maybe there is a connection.
Okay, I should clarify. He wasn't talking about job hopping. He was talking about like moving from one industry to the other, going into the private sector and serving, and making sure that people had the confidence that they can, that they can pull off these jobs.
I love that we went there, though, right?
Yeah.
Do you know how long Scarlett, Carol, and I total have been at Bloomberg?
I have no idea.
Okay, a long time.
Decades.
It's a great place.
On decades.
But this is also from Jay Powell, who knows he's probably going to be unemployed no matter who's president in the next go. So I'm just putting that out there.
Ooh,
Anywho.
Wow. Okay.
His term's going to end at some
All
point.
right.
Yeah.
All right. All right.
Who's going? Scarlett, IMAP? Is
No, I'm going to, oh, yeah, go Scarlett.
All right, let's look at the IMAP. Why don't we do that? We have more sectors in the green than in the red. Let's start with the red parts of the pie. Consumer staples off by more than 1%, so they're the leading laggards here. Utilities and financials also under a bit of pressure. In terms of the gainers, you have communication services, energy companies, which are really rising in tandem with oil prices as oil prices rise for a fourth straight day, and materials. A late dark horse here coming up with a 0.6% advance.
All right, guys, let's get to some of the individual gainers. Spotify on that list, up more than 8% in today's session. Bloomberg reporting that the streaming company plans to raise the price of its popular, I know, see, inflation not going away, everyone. So they're raising the price of their service in several key markets for the second time in a year. We report a crucial step toward reaching long-term profitability. This is according to people familiar. They're getting ready to offer more tiers, so stand by for news on that. But nonetheless, investors liked it. Yeah, sure, but not we consumers. All right, Ford Motor up just shy of 3% in today's session. U.S. auto sales rising 7% in the first quarter. Strong demand for gas-electric hybrids. Hybrid models, guys, check this out, surging by 42%. Their F-Series truck, always its bestseller, fell 10%. Wow. Yeah, exactly, during that time frame. But nonetheless, investors were kind of good about the overall news. And then this one, courtesy of my co-host, Tim, giving me this name, Cal-Maine Foods. I don't know if you are, but we are all eating eggs, apparently. Shares jumping, this one up about 3.6% in today's session. The biggest egg producer in the United States, reporting third quarter earnings per share and net sales topped consensus estimates. They said that's total sales volumes or dozens sold hit a company record. So we're eating a lot of eggs. And I do have to mention Paramount because it really jumped about 15% in today's session. This after Redstone Skydance striking a tentative deal for their Paramount stake.
Well, because there's a bird flu situation happening.
Oh, I forgot to add that. Thank you for that. Yesterday
is the issue in Texas.
Yeah. The company did cull about 3.6% of its flock. That's how they say it.
So maybe we're still eating the same amount of eggs.
It's unclear. It's a supply and demand thing.
In this crowd, maybe we're eating more eggs. Anyway.
Okay, how about supply and demand for chips? Let's talk about that. I do want to talk about some of the worst performers.
Well, potato chips, maybe.
Yeah, not this kind of chips.
No.
I do want to talk about Intel. The news breaking late yesterday during our simulcast, actually. And Intel shares reacting today as a result, down 8.2%, declining the most in a couple months after the company gave a disappointing outlook for its factory operations, saying that losses have deepened at the business and it may not reach a break point for a couple of years. We're talking about Intel Foundry, which is a new division over at Intel that does manufacturing, and it had sales of $18.9 billion in 2023. It was down $27.5 billion from the previous year. I also want to talk about Ulta Beauty because shares fell 15%. I have not shopped at Ulta, but shares down 15%, the biggest drop since March of 2020. You actually saw a lot of peer companies move lower in sympathy. This after management made comments during JP Morgan's Retail Roundup Investor Conference earlier today in New York. The company said the first quarter started off slowly, a broad-based slowdown across beauty categories. Ulta now anticipates first quarter comp sales to come in at the lower end of the low single-digit growth range it had forecast for the first half of its fiscal year. And it also says that it lost market share in prestige makeup. The hair category also, according to Ulta, has been challenging. Finally, worth checking in on shares of Disney today after Bob Iger's win. Shareholders, of course, rejecting Nelson Peltz's bid for a board seat. Shares finishing it down a little more than 3%, Alex.
I should point out, Carol, that Scarlett buys her face cream from Costco.
Okay.
Just putting this out there.
I'm still investing in my face. I just do it at bulk pricing, which I appreciate.
Well, like Alex made that comment about the years we've been here. At this point, you do buy it in bulk. We all do.
Okay, but at Costco? Anyway.
At Costco?
They have some high-end stuff at Costco, Alex.
Okay,
I'll take you there sometime.
You just keep talking about that. Okay,
She looks amazing.
She does. I did
Alex,
say. I make fun
Alex.
of her, but she looks exactly the same when I met her 12 years ago.
There is a Costco in Brooklyn.
She doesn't change.
There is a Costco in
There's a Costco in Brooklyn.
You might want to check
We'll
it
take you there.
Oh, yes, there is, near Industry City, yes.
Yeah.
I don't want to go there. Okay, bonds, it's nothing. Nothing's happening in bonds. The conversation to me, though, will you see the 10-year get to 5%? I feel like we're starting to talk about that a little bit more in a way that we weren't just even a few weeks ago, guys.
All right, guys, we are getting ready, Friday for that jobs report. How do you feel about a 4-day work week?
I mean, I feel great about it, and it's never going to happen.
So great. Why don't you think it's ever going to happen, Alex?
Because we work in media. News doesn't sleep, man. News does not stop.
I think the only way it would happen for us is if markets, the New York Stock Exchange and the NASDAQ decided to have 4-day a week trading, which
I mean, they're
don't
moving
think
in
is
the
gonna
opposite
happen.
direction for a number of years, right? They were talking about after-hours trading and 24-hour trading. That would have, wreaked havoc on our lives. But I guess that's at the point where you bring in robots and AI to do more jobs for us.
Steve Cohen says it's coming, but he says not for his workers, because he said if you're running basically a portfolio or managing a portfolio, you got to be there every day that the market's open.
So who does he see the 4-day work week for?
Anyone who wants to go play golf and go to Mets games.
Exactly.
Well, speaking of robots, did you guys see the story about Apple? Mark Gurman sort of breaking that story about Apple potentially getting into the robot world after the car situation went nowhere. I guess I'm just curious as to the push should be AI, right? Like, why a robot? I guess I'm a little confused as to the longer term strategy and how that sells them services.
I mean, what's their track record on home appliances or smart projects or smart, products around the home that?
Well, they
that
have
really
the Apple
follow you?
Home, which has not great.
Yeah,
but
exactly.
I think one could argue that the iPhone is sort of like the hub of everything, and they've just dominated
then you
in that
need a
category.
robot?
That's what I'm saying. I don't know if you need a robot.
This is kind of perfect because in the story it says it's not yet clear what approach it might take in terms of what they're going to do. I mean, I don't know. I use Google Home and different things to turn on lights and stuff like that, or I ask it questions, but I don't know. I don't know what a robot
Maybe it's like a Siri comes to life.
Does it
type of
clean
thing.
up? Does it clean up? Does it do dishes? That's what I was looking for.
If
Then
it
you're
cleans up
in.
and sweeps, I'm all in. But then you also can have a Roomba. So I mean, I don't know what the situation is, but I think it is interesting. The Internet of Things was what we were talking about, 8 years ago as being the trillion-dollar industry, and then it feels like we moved on then to AI in a different capacity. So where that still lives, particularly for Apple.
Look, this is a really important question that investors have of where Apple goes after the iPhone. And Mark broke the story a few weeks ago that they've given up on the car, so it's not going to be a car. So where does the company go from here to create that new product?
And they're under pressure, right? They're under all kinds of
Oh, yeah.
regulatory pressure from the government as well. So they need to come up with a new product line.
What I want to know is, Scarlett messaged me what kind of skin cream that
Okay, we'll talk offline.
All right, that is a wrap.
Carl does fancy stuff like me.
Across platform coverage, radio, TV, YouTube, Bloomberg Originals. We call it Beyond the Bell. We'll see you guys same time, same place tomorrow.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
It is Bloomberg Business Week. That's Carol Masser. I'm Tim Stenivek.
You weren't interested in the skin cream?
Yeah, I mean, I would be, yeah. Yeah, anything at a discount. The hard part about Costco in New York City is where are you going to put everything, Because it's like...
I don't have a Costco really.
I told you we accidentally bought 9 pounds of chocolate chips, right? We're still working our way through.
A lot of Toll House cookies.
Oh, that
or
is.
chocolate
We've
chip
made
cookies.
a lot of Toll House cookies. We're down to the last 2 pounds of the chocolate chips, though, and that was a few months ago.
Yum.
Okay, so we talked a little bit just now about the jobs report coming out on Friday.
Mm-hmm.
We got a little peek into the labor market today because private payroll is increasing 184,000 in March after an upwardly revised 155,000 gain a month earlier. That's according to figures published earlier today by ADP. The median estimate, Carol, in a Bloomberg survey of economists called for 150,000 increase. On Friday, we're going to get the government's monthly payroll report. That's expected to show a gain of roughly 215,000 in private and public sector jobs.
All right, we have another take on the labor market. We welcome back Jane Oates. She's Senior Policy Advisor for Working Nation. It's a nonprofit media organization, that focuses on the future of work. She's also a former Assistant Secretary of Employment and Training under the Obama administration. She joins us on this Wednesday in Arlington, Virginia. Jane, good to have you back here on Bloomberg. How are you, and how do you describe the U.S. workforce right now? I mean, we keep seeing data points that remind us it's still kind of tight and workers are doing okay.
Yeah, I mean, I think, Tim mentioned, first of all, Carol, great to be back. Thank you for inviting me back, the two of you. But he just mentioned the ADP report. Not only was that job number terrific, but I hope you saw that salaries are up 5.1% year over year. I mean, I think that's the best news. We at Working Nation try to do everything from that personal standpoint. And when people are making more money, it's a happier kitchen table, whether they're using Costco skin cream or chocolate chips or not.
Fair. I love it. Hey, what's not to love right now about the job market?
So I'll tell you what bothers me the most. It's the labor market participation rate. We know at 62.5%, we know that there are able-bodied, talented people sitting on the sidelines, and there are lots of employers saying they are desperate for help. I think that's why we tell the kinds of stories we tell at Working Nation. We're trying to motivate people. There is a good job for you right now. And people don't believe you because you hear these stories, and I'm sure you two hear them all the time. People send in a resume after resume and hear nothing. It's crickets. So they don't get any feedback on why they didn't get the job.
That's so frustrating for people.
Feedback.
I've seen them talking about this online.
Awful.
I mean,
so
there's TikToks
I
about
think
this.
that's hard.
Yeah. Hey, one thing I wanted to ask about. Go ahead,
Can
Carol.
I just ask you, though, so what is the disconnect? I'm looking at my Bloomberg, and I'm looking at the U.S. labor force participation rate, and where we were at 2019. We were up around, not quite at 63. I'm looking at where we were. Yeah, we were above 63, and here we are at 62.5. I mean, you see certainly that we have not gotten back to that level. So is it, what's the disconnect? Is it older people who just retired and they've left the workforce, or what is it? What's going on?
I think there were some retirements post-COVID, and some of them may have been earlier than people had anticipated.
I've seen it in my own family of members who, were kind of done, and just were able to take earlier retirement.
Yeah, and you hope that they're happy with that. Those people that made it as a free will choice, that's great. Those people that were kind of pushed out, we want to try to get them back in and say there's a place for them. But I'll tell you what, it worries me that it's a lot of younger workers because, in last month's jobs numbers, you saw that youth unemployment, 16 to 20-year-olds, it was 12.5%. Now, that's really scary. Those are young people looking for work who couldn't find it. So I hope we get better at defining the skills that are needed for jobs, and people get better at defining their own skills.
Hey, you know what's interesting to me? I'm pulling up this. Carol had this on her
Bluey
Bloomberg.
is what's interesting to him today, but that's okay. That's another story.
Carol had this on her terminal, and she was looking at it just now, so I peeked over. It is the a chart that shows the labor force participation rate, and I have it going all the way back to the 1940s on here.
Yeah.
We've been in a steady decline since the year 2000, basically.
2000.
Yeah. What's been going on here?
I wish I could get that answer because then I could solve it, right? I think it's a mosaic of causes. This idea, right around that time in the early 2000s, people started experimenting with that software that could sort your resumes for you. And, while that software has gotten better, I still think it excludes a lot of talented people.
So you're saying the participation rate is reflective of people not being able to get jobs?
I believe that, yes.
That's interesting. So it's not necessarily people choosing not to participate in the labor force. Because the
I
jobs,
don't think
the jobs are
yeah.
out there. I mean, look at we look at the JOLTS numbers that we got earlier this week. We have more than 8 million
Right.
job openings.
But part of it is geography. You know, you guys are based in New York. Would you move to Iowa for a job? You know, I'm based in Virginia, as you said. I wouldn't move anywhere for a job at this point. You know, I mean, and so I think people are really, they're hearing about these millions of open jobs, but they're really not adjacent to where they want to live.
But it also means that those people have the luxury of not moving, right? That somehow they're supporting themselves. Like, you know, unemployment benefits only go for so long. And I guess what I'm trying to understand is if companies have these openings and they really want the jobs filled, they'll find the people. So I also wonder if companies are kind of holding back a little bit because, you know, they just want to make sure that they have, you know, the workers they need and they don't want to overhire. Like, I feel like companies have gotten really careful about that.
Carol, I think you're exactly right. You know, probably the 18 months after, as we were coming out of COVID, people were overhiring. You
Right.
saw it in every employer.
Work hoarding,
They were
labor
just worried that
hoarding.
people weren't going to show up. Yeah, and now they're kind of right sizing, but they still they post these jobs because they don't want talented people not to think they're hiring.
Okay, we got to talk AI with you because I don't think we've had a chance. Yeah, I don't think you've been on since, you know, in a few months, and we haven't talked much about AI with you. Jane, what happens to people if we become so much more efficient as a result of AI? What happens to the worker?
So, look, nobody is going to lose their job to AI. I believe people are going to lose their job to someone who knows how to work adjacent to AI. So it's really important that people not be afraid and they learn how to use it. Now, that being said, I would not counsel anybody right now to go and be a paralegal, because I think that's a job that's likely going to be, as AI improves, a job that is better done, you know, with automation, and human beings will edit it, which means that human beings have to get better skills, right? They have to get those editing skills. But I think people really need to, just as I would have said 25 years ago about technology, I mean, people need to embrace it because it's going to impact every single job. And if you're afraid of it and not willing to work with it, I don't mean everybody has to be able to create an algorithm, but how do you use a tool like GPT on your job? It doesn't replace you. It makes you work better, I hope. And it also is, I think, a clear message to all of us that you have to really hone in on those uniquely human skills. Things that right now and in the near foreseeable future, machines are not going to be able to do. Show compassion, empathy, leadership, creativity, all of those things. We have to double down on not only teaching those skills and having people practice them, but assessing them so they can say they're proficient in those skills.
I would say that we have to be stewards of AI going forward. Like, just like we do a search, right, and we come up with information, we're like, well, that doesn't seem right, so we're going to have to kind of drill down, and we're smart about it. So I do feel like this idea of adjacent AI makes a lot more sense to me. Jane, we got to leave it there. Jane Oates, Senior Policy Advisor for Working Nation, joining us there from Virginia. Do want to mention Levi Strauss out with their latest earnings. The stock is up, Tim, more than 6% here in the aftermarket.
Yeah, the company reported higher than expected sales and profit in the first quarter amid market share gains and lowered costs. It helped to fuel a more optimistic full-year outlook. The company did announce cost-cutting plans back in January and said those measures, Carol, are now paying off.
Yeah, just looking at the DES page on the Bloomberg, stock's up about 13% so far this year. About 11% of the float is shorted. So those people who are maybe expecting not great things from earnings are going to be scrambling a little bit to cover their shorts here because the stock's up 6% here.
Yeah, recent forecast as well.
All right, you are listening and watching Bloomberg Radio. This is Bloomberg.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. Sources tell Bloomberg Shari Redstone, the controlling shareholder of film and TV giant Paramount Global, has reached a tentative agreement to sell her stake in the company to David Ellison's Skydance Media. We're keeping an eye on Levi Strauss shares after ours. Levi now up by 5%. It reported higher than expected sales and profit in the first quarter amid market share gains and lowered costs. Stocks end of the day mixed. Dow Industrial slumped 43 points, a drop today of 0.1%. We had the S&P up by 5.5 points, up 0.1%. NASDAQ was up 37, a gain there of 0.2%. The bond market did rebound from session lows, with Jay Powell only reiterating the Federal Reserve's wait-and-see approach before policymakers decide to embark on interest rate cuts. 10-year, 4.34%. The 2-year, 4.67%. Spot gold up 0.8%. $22.98 for an ounce of the precious metal, while West Texas Intermediate crude was up 0.5%. $85.62 for a barrel of WTI. Again, recapping, stocks ended the Wednesday session mixed. The Dow was lower by 0.1%. S&P up today by 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you for that update, Charlie. Appreciate it. Well, if you were to spend an entire Saturday binging old episodes of your favorite TV show while snacking on popcorn, Carol,
I've done it.
what would the show be?
Don't judge me. I'm not going to tell you.
All right. Maybe throw a nap in there, too. Throw a nap in there, too.
I did do the bear. Remember the bear?
Yeah, the bear. That's a good one.
You were like, finally.
Would you call it one of the most productive days of your life?
I don't know if it was productive, but I really loved it.
Okay, well,
made me very happy.
Laura Mae Martin did just that, and yes, she writes in her new book that watching old episodes of Heartland, which I had to Google, I didn't know that was a show, for 10 hours was indeed one of the most productive days of her life. She should know what's productive because she's the executive productivity advisor at Google, also the author of the new book, Uptime, a practical guide to personal productivity and well-being. She joins us here in the Bloomberg Interactive Broker studio. So, Laura, please tell us, how in the world is binging something on Netflix or a streaming service all day productive?
I think the old definition of productivity is how much are you churning out, how much are you checking off your list, but when you think about it in a holistic sense, if your intention was to relax and spend a day doing something you love, and you set the time aside to do that, and you executed on it well, then I would argue that that was a productive day in the long term.
Interesting. I love this. I mean, take a step back and tell us, because you carved out a niche for yourself, certainly, over at Google in terms of productivity. Tell us about how that came to be and the kind of things you were doing for workers there at the company, and kind of taking something like, where you're telling employees, go home, go binge, come back in 24 hours. Like, help us through. Yeah.
So I think when I started, I was in sales, and this job didn't exist, and I was really just managing my own email, my own time, my own energy in a way that was making me productive. And Google has a great program where you can teach other Googlers anything. And so I started teaching an email training about how to use your inbox like a dashboard and manage all of your tasks. And that eventually led to me coaching people one-on-one and working with executives, and eventually starting productivity at Google. So it was something that people were already doing and needed more organization around, and that's what led to it.
Okay, so let's talk about some of those executives, because arguably the people who are creating, among the most valuable companies in the world, they're productive.
Yes.
Look what they did.
Yes.
They took a project at Stanford and made it into a over $1 trillion company.
Mm-hmm.
What were they doing wrong, though?
I think so. A lot of times when I'm working with an executive, it's at maybe a turning point. So it's just having that objective lens to help look at, you're taking on a new team, or now you're working globally, or you have a different role than before. And so this is a good time to take a look at priorities and responsibilities and how you're thinking about your time. So many times I'm there just to kind of ask questions and prompt and create systems between a chief of staff and an assistant, and how everyone works together. But the great thing is, like you said, all of them are already productive in a lot of ways. So I'm learning from each of those sessions and then spreading some of those across the company.
There's being productive kind of with your work life. There's being productive with your personal life. We have Michael, a listener, writing in, wondering if people would improve productivity by scheduling times for their personal goals as well. So how did you factor in that side of it?
I actually don't recommend people come up with personal goals and work goals because there's only one you. There's only one pie of time. So
That's so depressing.
No, it's good because it helps you think about I'm one holistic person with one set of time and things I can focus on. So if I have a personal goal, I have to make room for that at work. If I'm taking on more at work, I need to make room for that in my personal life. And so, it's a trade-off mindset.
Every decision impacts everything in your world, right?
Exactly. And saying yes to anything is saying no to something else implicitly. So you have to figure out what that is at all times. And so, when those personal changes come up, if you're moving your family across the country, something at work might need to take a back seat.
So do the heads of the company reach out to you and say, hey, we need some help with something?
I do training for everyone at the company. So all the way down to new employees to executives. So.
Well, what's your advice? Because Tim, you and I talk about this a lot. You have a young family. My daughter's older at this point. But I mean, it does feel like we live, we have full jobs, to say the least.
Yeah.
We commute. You're in New York City. There's just a lot that comes at you. I mean, how do you kind of work with somebody, and how do you help them kind of be more productive in all aspects of their life?
A lot of times the first question I ask is, if you had an extra hour of your day, what would you do with it? And what that gives me that information of what I call kind of the cusp, what you want to be doing but you're not quite getting to. And so it's usually something like, I wish I could spend more time with my family, or I work on this bigger picture project, or I've really been wanting to learn how to sew.
Well, that's my question. Do people who you ask that question to ever say they want to spend more time working?
Sometimes it's I have a team and I want to focus on more big picture items.
Are they like,
Laura's
Laura's going to report back to my boss.
Sleep, spend more time with my family, exercise.
It can be just what they've been meaning to get to, and it usually just means what they're just out of reach.
Well, it's funny, there's a book I read, Steve Schwartzman of Blackstone, and a colleague of ours, Jason Kelly, we talked about, and there's a thing in him, in what he said is like...
What It Takes is the book.
What It Takes, thank you. But he was like, think big, that don't kind of get caught up in the tedious small things. If there's something kind of similar, but on a bigger scale that's going to have a bigger impact, don't waste your time on that little stuff. Go big. And I wonder if you kind of incorporate that thinking into how you be more productive.
Yeah, I think a lot of times people get in the weeds again of like, if I'm a salesperson, how do I figure out how to make more calls per day? But the reason I recommend even incorporating downtime into your schedule is because that's when you come up with those big picture ideas. I just talked to someone yesterday who said, my boss should pay me for my hour run in the morning because that's when I contribute most to work. And so while we feel like it's all about how much we're doing little, it has to be also, how are we thinking big?
I like that. I think a lot of that has, I don't know if you've noticed this, but Laura, there's been this shift since the pandemic, I feel like, that it's much less about...
No, she hasn't noticed it.
But you don't know what I'm going to say.
Okay, fine. I thought I know. I think I know.
You know what's not productive? Well. You know what's not productive for me is...
I just think I know. Okay, go ahead.
Is this idea of productivity doesn't necessarily mean butts and seats at the office.
Right.
So it's the idea of actually, if you create a good product, does it matter if you're actually working from, 3 to 5 p.m. or you need to go pick up your kid?
Yeah, and that's why I tell managers that January to March should be the new 9 to 5. You need to be thinking about macro goals and how people are reaching them, because some people,
March. I like that.
Yeah, people in the pandemic realized that they liked waking up super early, working for a bit, then having a workout, or waking up late and working into the night. And that's such a big part of productivity, is your own natural rhythms. Not all time slots are created equal. And so if you figure out when you work the best, you should be able to honor that as much as possible versus the traditional schedule.
Well, you guys in the tech world, and we had folks that we talked to during the pandemic and said, listen, we've been working from home and flexible and hybrid and all this stuff for years. We have a story that's on the Bloomberg, most read, has to do with Steve Cohen, big hedge fund investor, know him well, but he, our audience knows him well, saying that he thinks the 4-day work week is coming. How do you guys, if an employee says to you, listen, I'd be much more productive if I work 3 or 4 days, just jam it all in. How do you approach something like that?
I can't speak for how Google as a whole is thinking of that, but I think that when you're honoring flexibility in general, that should be something that you're thinking about. If somebody says, again, my goals are from January to March, can I accomplish those in 4 days? And is that something that, unless it's interfering with your ability to meet on Fridays or something like that affects collaboration, then it should be considered, because, it's not about the hours.
Did you see a shift at Google in your years there? There was this whole idea early on with Google where, I don't even know if they still have this, we're at 20% time where you can just dedicate a fifth of your time to whatever project you want to do. Have they pulled back on that a bit?
This program that I created was my 20% project. So it's really about finding your passion and your need and merging that with the need of someone in the company. So clearly here there was a need for an organized, version of productivity at Google, and that's what I spent my time on.
There's one thing in the book, and it says one component of peak productivity is having a good inventory of everything you're not doing yet.
What does that mean?
That is equally as important as everything you are doing. So in other words...
Like a to-do list?
A to-do list, but what happens is people when I've studied to-do lists and how people use them,
I make them all the time, but they frustrate the heck
Well,
out of me.
exactly, because you probably have something that's due by 5 p.m., and then you're also like, I should do this before the summer. And then you have just a list that's kind of merging all those things together. And so in the book, I talk about having a list of everything you possibly could do versus everything you realistically will do, and keeping inventory of those separate.
I'm laughing because I'm thinking about the way my wife and I figure out like calendars and stuff. It's like the Google Calendar, it's the whiteboard in the kitchen, it's like texting each other. I mean, what do you do at home?
Yeah, so I do have a Google Calendar with my husband. I invite him when he needs to pick up or I need to pick up, and if it's not on the calendar, it's not truth.
It's not going to happen.
20 seconds left here. If somebody wants to start thinking about being more productive in their life holistically, what should be one step that they should take, just quickly?
Start planning for the day after the night before. So making an hour-by-hour plan of how you plan to spend your day tomorrow before you go to bed.
All right, add it to your to-do list, Carol.
I kind of do lists the night before.
You know what you need on your to-do list? To make a to-do list.
So look at my computer. There's like lots of stickies all over it.
Can't see anything on your computer.
Good luck with the book. This was fun. Laura Mae Martin. Her new book is, well, first of all, she's Executive Productivity Advisor at Google. Her new book, Uptime, A Practical Guide to Personal Productivity and Well-Being.
Let's get a check of the latest world and national news. For that, we go to Amy Morris in the Bloomberg 99.1 newsroom in D.C. Hey, Amy.
Hey, Tim. Taiwan's strongest earthquake in a quarter century leveled dozens of buildings on the eastern side of that island, killing at least a dozen people, disrupting semiconductor production at some of the world's leading chip makers. Bloomberg's Adrian Kennedy explains from Taiwan.
It struck in the east of Taiwan, in Hualien, which is relatively underpopulated compared to the western part of the island. This is an island of 23 million people, which is critical to world chip supplies. It's a major technology powerhouse, but the majority of that is on the west of the island.
Still, Bloomberg's Adrian Kennedy reports the quake did force Taiwan Semiconductor and some smaller rivals to move staff and evacuate facilities. The White House is responding to the aftermath of a meeting to celebrate the holy month of Ramadan, where a Palestinian-American doctor who spent time in Gaza walked out in protest. Thayer Ahmad is an emergency-based physician in Chicago, telling ABC that he doesn't think the White House has done enough to protect the people of Gaza. White House Press Secretary Karine Jean-Pierre says the president is vowing to continue to press Israel to do more to protect aid and aid workers.
The president and the vice president have been in communication with the community regularly since October. And this is something that they asked. They asked for a private meeting, a working meeting, if you will. And so we understand how this community is feeling. It is deeply painful moment for many in the Arab and Muslim communities.
And now we are learning President Biden and Israeli Prime Minister Benjamin Netanyahu are set to speak tomorrow. Federal prosecutors growing frustrated with the Trump-appointed judge who is overseeing classified documents case in Florida. Special counsel Jack Smith said in a filing that the judge's understanding of some key legal issues in that case are fundamentally flawed. Global news 24 hours a day whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
4:40 on Wall Street. We do check markets all day long here at Bloomberg. Turned out to be a mixed Wednesday for the U.S. equity market, with the Dow Jones Industrial Average lower. S&P, NASDAQ, they're both higher. The bond market rebounded from session lows, with Jay Powell only reiterating the Fed's wait-and-see approach before policymakers decide to embark on interest rate cuts. S&P today up 5, a gain of 0.1%. Dow Industrials down 41, a decline of 0.1%. The NASDAQ Composite Index up 37, up today by 0.2%. 10-year 4.34%. The 2-year 4.67%. Spot gold up $19 the ounce, up 0.8%. 2,299 on spot gold. West Texas Intermediate crude up 0.6%, 85.62 for a barrel of WTI. Well, as for the overall market backdrop, Catherine Rooney-Vera is chief market strategist at StoneX Financial.
We could go one of two ways. We could see a reacceleration in the economy, which means reflation and a Fed that cannot cut, or God forbid even has to hike. Or we could see the rising risk of a Fed-induced recession with too high nominal rates and inflation continuing to fall, meaning that real rates really start to bite the U.S. consumer.
Ulta Beauty shares plunged after the company said it expects first quarter comparable sales to come in at the lower end of the low single-digit growth range it had forecast for the first half of its fiscal year. Ulta today down by 15.3%. Again, recapping stocks mix, the Dow lower by 43 points, down 0.1%. S&P up 0.1%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, former President Trump's cash crunch in the face of mounting legal costs is revealing who's willing to come to his aid as he seeks another term in the White House. Carol, while some on Wall Street may donate to his campaign, commingling financial interests is seen as another matter after he was found to have inflated the value of his assets by billions of dollars in bank transactions.
This is why this story is so interesting. Max Abelson and Tom Maloney write about the small group of financiers who are the Trump lenders of last resort. Tom, by the way, of course, editor here at Bloomberg News, and he joins us here in our Bloomberg Interactive Brokers studio. Great story, great read. Who are these lenders of last resort for the former president?
So the provider of this bond is a company called Knight Insurance, which is owned by Don Hankey, otherwise known as the subprime auto king of Southern California. His company Westlake.
Do you know him?
I did not know.
You're from Southern California.
I am.
His company Westlake is a real kind of pioneer in providing or innovating subprime auto loans a long time ago after he inherited his father's car dealership. So he's got this connection there with Knight Insurance, which provided this $175 million bond to Donald Trump. But he's also the biggest individual shareholder in another company called Axos Bank, which has refinanced a couple of Trump's properties in the last couple of years.
How are you viewing this loan? Because is it one that is a business opportunity, or is it one that is supportive of the candidate, former President Trump?
I think it's both of those things. You know, I mean, look, he has said, this is Don Hankey has said that there's kind of a business opportunity here because there are these big banks that don't necessarily want the political risk, and he's comfortable with that. He's also said he is a Trump supporter, but that's kind of a by-the-by thing for him. It's not the reason why he's making these decisions, but, you know, obviously it's hard to tell. I mean, I would say when other parties don't want to do a certain type of business that there is an opportunity there. And Don Hankey, you know, obviously he's a person that's comfortable lending to high-risk credits, and maybe this is just another one for him.
Well, and it sounds like they have a little bit of a relationship, right? Or they have a little bit?
He has said that he's never spoken to Donald Trump before.
So right? Just business.
Yes, that's correct. I mean, people in his family have donated to Trump before, and he has donated to Trump in the past. He said he's voted for Trump. But he said that this is a business decision and he doesn't have a personal relationship with Trump.
Was he willing to talk? It sounds like he was. He was accessible?
He spoke to a legal reporter that we have yesterday, yes.
Okay.
Do we know the terms of these loans?
Is it like that subprime auto thing?
So look, these appeal bonds is kind of a very niche part of the finance market, and it's not one that, to be frank, I'm especially familiar with, but it's completely collateralized by cash. So from that perspective, there's not a lot of risk, right? You have cash for this 175 million.
So meaning that the former president shows that he has $175 million in cash. So then a company gives him a loan for that amount?
They give the bond to the appeals court covering that 175 million, but my understanding is they get that 175 million in cash. So there's really very little risk to them. I think what probably turned some people off is obviously there's a political risk. You know, the Chubb was the lender on Trump's larger bond last month, and there was a lot of controversy around them doing that business.
They had to come out and say,
sorry,
quote,
smaller bond, not larger bond.
We are, the CEO of Chubb, Evan Greenberg, had to come out and say, quote, we are in no way supporting the defendant.
Exactly. So it was a little bit of a different reaction there from what we saw from Don Hankey.
But you do wonder about, you know, just face value, these individuals who do come to the aid of the former president, and whether or not, again, just speculation on my part, and observers would probably say the same thing about whether they're just strategizing that whether or not Donald Trump gets reelected, and that gives them potentially a very nice relationship with what could be, you know, his second term in the White House.
You know, absolutely. I think that's something that needs to be looked at, and you need to be aware of these relationships. And it's tricky for Donald Trump. I mean, he was already a businessman with a lot of different debts and a lot of different business opportunities. He was constantly exploring and branding and hotels all around the world.
And it wasn't always so transparent too, right? It wasn't always very clear, some of it.
No, I mean, look, he's got a lot of different buildings and a lot of different businesses, and it's certainly not transparent. And it's only gotten kind of less transparent as we get closer to the next election, I think.
Okay, Don Hankey, the subprime auto loan king of Southern California, is one of the parties involved here. You and Max also profiled Gregory Garibrandt. Talk a little bit about who he is.
Yeah, so he was a former Goldman Sachs investment banker. He's now the CEO at Axos Bank. This is the bank that refinanced a couple of Trump properties that I mentioned, and that Hankey is the biggest individual shareholder in. He is well known because the bank used to be called Bank of Internet. It's a sort of an unusual online-only financial institution, and it's...
Is that like Bank of Chocolate? Bank of...
Interestingly, it also kind of
cell phones?
was involved in some big Kushner real estate refinancings a few years ago. So there's certainly a relationship there between Axos and Trump and Trump-related figures that's been going on for, you know, at least 5 years now.
He's got an interesting backstory, though. Goldman Sachs, right? Well-known, obviously. We talk about Goldman, one of the iconic Wall Street firms. But I forgot that his pay, I guess he got a lot of attention when his pay went above, was it
Jamie Dimon. Yeah, exactly. Running a bank that's a
Bank of
fraction of the
Internet.
size.
Bank of Internet is the place to work.
Oh, that's like, who knew? Like, that is just crazy. I don't know, your takeaway when you do a story like this, right? And we all followed as the former president was trying to come up with that bond payment, if you will, or post that bond, and was really struggling to find people. I don't know, what's your takeaway when you do a story like this and you see some of the individuals behind it?
My takeaway when I do a story like this is how many interesting individuals there are out there with all of these strange businesses like subprime auto lending and insurance, and and you could still never have heard of these people.
Yeah, that's a really good point.
Yeah,
and they've done really, really well, right? These are
and just remind us
$7.5 billion he's worth. Yeah.
How risky are these loans?
Well,
the subprime? What are you talking about?
No, the ones that they're giving the former president. Not risky at all.
No, not risky at all. I mean, I think there's a similarity really with the subprime business. You know, that's a kind of seems like you're lending to a really risky counterparty, but the collateral that you have is really good. And repossession technology. He's got a car technology company as well, Don Hankey, which I think does a lot of repossession stuff for car dealerships. You know, on the face of it, it seems like it should be a risky loan, but it's actually not.
I don't know. I'm just still, like, I got stuck at the mannequins thing. I'm not going to give it away. It's in the story. But it's like, gosh.
Hey, if you've driven past it growing up, maybe you know
Did
about
you?
it.
Did
no,
you?
Not this one.
You got to
but
get
a lot of
around.
people.
I thought you were from this area.
Central Coast, not LA.
Anyway, unbelievable read. Tom, thank you so much. Tom Maloney, he is editor at Bloomberg News. Check out this story. You can find it on the Bloomberg. This is Bloomberg Business Week.
Your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Levi Strauss shares now up by 7.3%. Levi reported higher than expected sales and profit in the first quarter amid market share gains and lowered costs, helping to fuel a more optimistic full-year outlook. Disney shareholders today handed CEO Bob Iger a vote of confidence, rejecting dissident investor Nelson Peltz's bid for a board seat at the giant entertainment company. Disney, though, down today by 3.1%. Intel is revealing new details about its manufacturing operations and says losses have deepened at the chipmaker's factory network, and the business may not reach a break-even point for several years. Intel is giving a more detailed picture of its finances as part of an ambitious turnaround plan by CEO Pat Gelsinger. More from Bloomberg Technology's Ed Ludlow.
They're talking about being operationally profitable at some point between now and 2030. So the sell-siders see hope that the turnaround plan will come. It will come later than everyone thought, but there's still belief that separating out the foundry business from the design, essentially the products business, is the right move. And he's also installed a CFO for that standalone foundry business as well, whose name is Lorenzo Flores.
And that's Bloomberg's Ed Ludlow reporting. Ford's American auto sales rose 7% in the first quarter on strong demand for gas-electric hybrids, despite a laborious launch of a redesigned F-150. F-150 pickup truck. Some of the other stories that we're following at this hour: Lilly's weight loss drug Zepbound is in shortage in the U.S. after mounting complaints by patients, doctors, and pharmacists who were having trouble finding the drug. Turned out to be a mixed day on Wall Street. Coming up, we'll have more on the markets, and those are our top company stories. This is Bloomberg.
This is Bloomberg Business Week with Carol Massar and Tim Stenivek on Bloomberg Radio and Television.
It's Bloomberg Business Week. That's Carol Massar. I'm Tim Stenivek.
Tim was explaining a story. It was really complicated.
Telling a little story.
Going down memory lane.
Because Doug Krisner's in here.
He is. He's in the house.
Doug.
Yo.
Just back from California, still recovering.
Well, that was a week ago. I'm still recovering. I'm
Still
trying to get
recovering.
my head into the news flow. I mean, every day, right?
I know.
Believe it or not, it's Asia Thursday.
Yeah.
Which means it's like Friday's Eve for Doug. Tomorrow's your Friday.
So Janet Yellen is on her way to China. She was talking to reporters about reserving certain options that the administration may have when you're dealing with this issue of overcapacity. It's showing up in a big way when you look at the EV market in China.
Right.
This is something we've talked a lot about vis-a-vis the European auto market. And I think there's concern here on the part of the detrimental effect that overcapacity, not in EVs necessarily, but anything that may be related to clean energy. So there's still deflation in China, and they have kind of maybe the motivation to export a lot of that overcapacity right now, and that could have a very negative impact in other markets like Europe and the United States.
Very interesting, all this kind of protectionism that seems to be going on.
Okay, so that's
that
where I
way.
wanted to go next.
What?
We didn't have a chance to talk about this yesterday because it broke late in the day, but China's asking traders to curb some arrival of overseas corn. Did you see this, Doug?
I didn't see that.
So this is interesting. Chinese customs have asked some traders to limit deliveries of foreign corn into bonded areas in a move aimed at easing domestic oversupply and supporting prices for farmers before planting season. So another example of that protectionism.
Right. Well, but the deflation story is a big story. And one of the key questions that we've been asking a lot of our guests, and you and I have talked about this, you guys and I have talked about this in the past.
No, just you and I, not him.
Well,
I'm just here talking about corn.
The issue of
Corn?
whether China could repeat what Japan went through 30 years ago, that they're stuck. Next week we'll get the PMI, or not the PMI, the inflation data for China, and we'll see whether or not these deflationary forces.
Another thing that startups need to look for is a market that is either started to undergo or is soon going to undergo exponential growth. I think this is actually related to one of the biggest mistakes investors make when evaluating startups. Investors always say, well, what's your growth rate? We care about the growth rate. Investors will forgive smallish revenue today if it's growing quickly. For some reason, people don't think about markets this way. But if you think about the most important startups, they are the ones that I start in small markets that are growing very, very quickly. 11 years ago, the market for iPhone apps was $0. It's now huge. And I think if you only think about the TAM today, you'll make a big mistake. What you really want to do is identify a market that's going to grow every year and be able to ride that up elevator.
Welcome to the digital age. Are you struggling to stand out here? Don't worry. Meet Blue TV, who is your digital superhero.
Blue TV is a multi-purpose online media network that also provides digital marketing services. We are based in Islamabad, Pakistan. We are expert in creative marketing, social media and digital marketing, search engine optimization, web design, page rank, and SERPs, video editing, recording and production.
So, what are you waiting for? Pick up the phone and call or WhatsApp Blue TV on given number, or visit our Facebook page at facebook.com/blue.online.tv.
With Blue TV, your business growth will be skyrocketed.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, Like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
My general advice is continue to seek out companies or people that are maybe one stage or two stages ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down that path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to build a path towards that. It's almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there, and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So it's strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
With the Jose Andres organization, we heard